today we're going to talk about tax. And so to level set, if you could give us the base foundation of tax as it relates to Bitcoin and digital assets from a the IRS consumer perspective.
Sure. So when cryptocurrency, started to come onto the scene, it was originally not, the IRS didn't pay too much attention to it. It was a very small group of people that was using it. Mm-hmm. It didn't have a very large market share. But as it started to grow and companies like Coinbase started to come to the surface and they realized that there was millions and millions of dollars there, they realized that they couldn't ignore it anymore. The first step that the IRS took was that they needed to know exactly how much cryptocurrency was out there.
Yeah.
Because they wanted to tax it, they wanted to know what people have, and that's a general tax principle. Whenever there's been what they call an accession to wealth, essentially you get some sort of new wealth. The IRS says
they want their cut.
Yeah, they want their cut, and that's just a general principle in tax. Anytime you have something of value, it's usually taxed. And anytime that something of value moves, there's going to be tax consequences with the movement of that. So they wanted to know just exactly how much was out there. And then their next problem is it moving? Because if it's moving, there are going to be tax consequences. So one of the initial things that they did and what started to make headlines was they sent out what was known as a John Doe summons.
I remember that, yeah.
Yes, and a John Doe summons was sent out to Coinbase because it was the largest exchange at the time and probably the easiest way for them to kind of take a sample of how much was out there and use their analytics to determine. Now, John Doe summons is a curious thing because what the IRS does with the John Doe summons is they go into the court with no opposition. And they ask the court ex parte, which means no opposition and there's no other side. They essentially say, we think that the revenue laws are not being followed. We think that this particular company has information on the people who are not following the internal revenue laws, but we don't have the names. So we want to serve a summons to get the names so that we can collect. And what they were specifically looking for was transactions over $10,000 in cryptocurrency. Because the IRS in 2014 had said that whenever you receive cryptocurrency, you treat it as property, which means that it is value to you when you receive it, and then you are taxed on the gain when you either sell or exchange it or do something with it. So essentially, however much it's appreciated, you have to report it and pay the tax on that. And so that's what they were trying to get at, was transactions where $10,000 or more were moving, so that they could determine who owed taxes on there. So there was a big fight. Coinbase didn't want to give up their customers' information, which can be expected to protect privacy. But eventually they did end up having to give thousands of customers' names. Now, since that time, they've issued John Doe summonses to Kraken, to Circle, to SFOX, to a bunch of them. And the Justice Department has put out a press release saying that they are going to continue to use the John Doe summons to collect that information.
And they added it to the personal IRS forms when you file your taxes.
Yes, exactly. So they've added that question as well, which is something, as an individual taxpayer that turns out a 1040, if you've been paying attention, which maybe you haven't, originally it was on a schedule in the back. And then they moved it to the front. And then they kept making it more and more prominent. And now it sits right underneath the person's name, whether or not you've done it. What's interesting is it's changed yet again. So the 2022 question now incorporates the new definition, which is really the only legislation we've kind of seen tax legislation we've seen yet is the definition of digital asset was included from the Infrastructure and Jobs Act. They defined digital asset for purposes of brokers reporting it, but they're now using that. Now, that's important because before it used the term cryptocurrency. Now, a digital asset is different than cryptocurrency.
Sure.
Because as we know in the space, NFTs, other things that are there are different than cryptocurrency. So as it currently stands for taxpayers filling out their 2022 returns, pretty much if you have anything that's kept in blockchain digital form, the IRS wants you to check that box, letting them know that you've transferred it. And that's important for a little bit of history. I've also helped many taxpayers with foreign bank account reporting. For a long time, people were keeping money in Swiss bank accounts and not reporting them to the IRS. The IRS has litigated those cases by saying that you willfully failed to report it by not checking a box on a schedule in the back. So if you haven't checked that schedule, they consider it willful. And they've moved that. They've had some problems litigating that because some taxpayers have said, I didn't even know that schedule, or my software didn't bring up that schedule. And I think that's why we've seen that question move to the front of a return so that that excuse is removed in any future litigation. So that's really what they've been trying to do, is just gather the information that they have. The problem is when they gathered all that information, what they found out was they had a huge problem because they could figure out how much cryptocurrency was out there, and only a very small fraction is actually being reported. And so they've done all kinds of other education plans. They've sent threatening letters to people to kind of make sure that they report it. Individuals, if the best thing you can do is to just report what you have there, because it's a very easy thing for them to prove that you didn't do it, and it can get real bad real fast if they don't do it. But the problem is there's very little guidance on how to report it, and so it gets kind of confusing for individual taxpayers.
It does.